All right, all right. It's the beginning of a new day, and we had the markets up, the futures up, the S&P at least about 30. They came down to about, I guess we're looking at 11 right now. Um, I did see them go as low as up 5. So we kind of an indecisive day. We had some news reports come out. Um, and some earnings come out. So we're gonna have to take a look at that, see what's going on. Um, so let's get started. First things first. Man, the futures are up 17 right now. That's not bad. It's not a bad open. Probably open up about 10. Um, so we had jobless claims come in, and this is not refreshing. Let's see if we can get them. There you go. We were expecting 351 initial claims. We got 362. So we beat, not expecting, but that was the previous. The forecast was 355. So we have more claims, initial claims, than we expected. And we have more than we did last month, but I'm expecting that the revisions come in because there's always revisions. They'll probably revise that up, and we'll probably have the same amount of initial this week as we did last. And then the jobless claims on the average, they expected them to be at 332. They came in at 340. So continuing claims are continuing. GDP hit right on the head. The growth rate hit right on the head. And that's really all that's important. The continuing claims came in a little lighter, came in a lot lighter. That's nice. So a lot of came in a lot lighter than were forecasted. So claims are peeling off. What's more important, they don't even have it up here. I don't understand why, but Powell is speaking before the House today. So I think everybody's going to be sitting on the sidelines. We're going to have a day much like we did yesterday, I believe, waiting for Powell to finish up. And then is a wrap. And tomorrow, we're not really looking. We have personal spending, personal income, and ISM manufacturing that are going to be market movers. But that's it. Then we got into a bunch of Fed speaks. The third quarter is coming to an end, so probably around November we'll start getting those numbers. What's big on CNBC is just the Senate reaches a deal, which is going to get knocked down by the House, so it's no big deal. And then just nonsense. So really, we're just going to be watching the Treasury, and that's going to be our cue on what's going on with the market. And here we are. We have the Treasury fired up. So here's the daily chart. We had this indecisive doji right here, and I was looking for the break in it to continue moving down. A rebound came back, but the setup hasn't failed unless it breaks the high. So it's still very possible that we mosey on down. And I do believe that we're going to come down and close up these gaps before we continue our march up. But we're going to have to watch the treasuries and how companies adjust to the higher interest rates. And that's more of a long-term situation than the immediate. So looking at SPX, very negative bar on the daily Wednesday. And this looks like a bear flag setup. We could go and test the lows again. Really not impossible. And those lows would be 43.05. We want to see it hold this. I mean, if we break that 43.05, then we have a really bad situation going on here. I think we could be rolling into a bear market if we break that because, you know, here we have a high and then we made a lower low, right? This is our previous low right here. And we came down and made a lower low. Now we're making a lower high. So this is a downtrend. If we make another lower low, that's it. We're in a downtrend. We could even argue that we're in a downtrend right now, but it could reverse. Although by the look of the the daily, it doesn't look like a trend reversal setup. And a trend reversal would trigger if it breaks above these highs. So it looks like, I mean, we look like we're in the beginning of a downtrend, of a bear market. And hey, it's very possible, even probable, with Democrats running things in the office. So on the 60, we could put a trend right here, and breaking this line, we're probably going to come down and test that 306 mark. I'm actually thinking of how I'm going to play that if we break that line. I think I might just look for something. I'm going to have to do that after we talk a little bit. Okay, so that's pretty much it. And then on ExxonMobil, just a quick, I mean, this baby is running. We're going to let it go. We got in down around the 55 range. So I wouldn't really chase it. I'd wait for it to come back. I mean, you know, I'm pretty confident you could probably buy this thing again around 57, 52 if you're interested in that sort of thing. Pays a 6% dividend. Verizon, another high dividend paying stock. And this one actually looks like it's ready for a setup. I would take an entry breaking that 54.74 price. Viacom, I like Viacom, and I'm looking for a $64 number. There's no dividend on this one. This is kind of outside my program. But a good entry would be above the 42.32. You can try it here, be aggressive. It just confirms that it's on its up move once it breaks that high right there. But, you know, if you want to sit in it and wait in it, I mean, I'm just sitting in it. I mean, I don't really expect it to disappear. Tesla is not something that I'm recommending, but it's on my attention list, and everybody's paying attention. It's just grinding up. There's no setup. You could call this a bull flag right there, and you could take an entry. And this would be a swing trade because it's a daily, but you could take the entry at 795.64. On the short term, or a shorter term, to get an earlier entry, you could use a trend line on these pivots and wait for it to break that trend line. So if it breaks today, it should break around the 90s, 790, 788, depending on how far we go into the day. But if you put that trend line in and just take that break of that trend line, you're probably looking good on a swing trade. The momentum is flattening out, so this consolidation kind of just supported this range right here, got all the cheap stock out, and it could be ready for its next leg up, which looks pretty good. If you want to play the bonds and the taper, I'm in TBT. We were talking about it for quite some time, probably since June. I've been talking about it. I've been in it a lot longer because I felt that bonds were considerably low, and there should be some tapering and some rate hikes. So I started to position myself to take that. The TBT is a short of the bond price. So the bond prices go down, interest rates go up. Anyway, this is just something you could just jump into. You don't have to look for an entry. It's a fundamental play. It's based on the idea that interest rates are going to rise, and if you believe that to be the case, I say $22 is not a hard shot. So keep your eye on that. Let's look at the other stuff that the free folk of the world like. His fuel cell, still consolidating, hasn't really given me an entry yet. The daily momentum is very bullish, so you could probably take an entry break in that pivot high. And I like pivot highs because I'm just looking for a confirmation that we're moving up. I don't really need to be in at the bottom and out at the top. I like to get somewhere in between. As long as I'm buying it cheap and selling it high, I'm happy. On the 60s, it looks like it's going to drop off. So I'll just let it consolidate. Also, these are interesting times right now to just start throwing your money into the market. Just doesn't make sense. So many variables out there. You know, let all the nonsense get out of the way. Or maybe buy what you like on dips, and then we'll start moving up again eventually. Here's plug power. Actually, the patterns all look the same for these stocks. So really, you could take it on a break of the pivot high, but I mean, no reason why you can't wait and just watch it. Meta Materials. I mean, I don't see an entry there either. Nice consolidation, but I'm not looking at any entries yet on this. It's just too erratic, too whippy. It's just not giving me anything. AMC, see you real soon. Again, we said we would stay bullish until it breaks that line. Once it breaks that line, I think you're going to probably fill that gap right there at that 16. So all you apes might want to get on board with the shorts. Smile Direct. I don't know. I get all these things. I see nothing here. Just let it keep floating down. It's floating down right now. Maybe at around 514. Well, we're pretty much there, but it might stabilize around 514. It just looks very, very negative. Yeah, there's definitely no entry yet. Tesla we talked about. Lucid Group. Didn't. It's consolidating. I mean, that's a very negative bar. It's probably going to break that bar and come down. Got a few gaps down here. It could possibly fill in. And again, everybody's just kind of backing away from these memes. Sophie Technologies. You know what? Just hold off until it closes this gap right here. Your sister's Aunt Fanny. Yeah, see that gap right there? Yeah, let me make my life a little easier. Yeah, well, not that much easier. Just look for it to fill that gap right there at the 1519. And that's probably your entry, although technically it's not really giving an entry. But I certainly wouldn't make any moves on it until I see it fill that gap. And anyway, that's the wrap of the day. Now we're just going to wait and see what the market affords us. What are we looking at? Dow's up 83. NASDAQ's up 45. And this is all just flat opens. I wouldn't rush into anything. The S&P is probably up about 8. I didn't see it yet. But anyway, that's the morning meeting. We've got about 20 minutes till the market open. So everybody just stay calm, be at peace so you can think clearly. Don't get emotional. If you're feeling emotional, you get too much money in the market. So good luck trading today.